When I first started learning about investing and I heard about dividend investing, I thought the goal was to chase stocks that had higher yields and capitalize on quick cash. But I quickly learned that that was the wrong way to go about dividend investing. Instead, over time, I learned about the dividend growth strategy, and honestly, it changed the way that I looked at dividend investing as a whole. The goal of this strategy isn't to profit on quick cash or chase higher yields. Instead, the goal is to build long-term wealth over time by investing in companies that are trusted and proven with a good track record. If you're new here, my name is Nick, and I'm learning how to get my money to work for me using the stock market. And in this video, we're going to take a deep dive into the dividend growth strategy and explain why it's such a powerful tool for the long-term investor and the patient investor. Stay tuned. So the dividend growth strategy is pretty simple. You're going to invest in companies that have raised their dividends that they pay out to their shareholders every year. So these aren't companies that are flashy. They're not in the media that often. You're not going to be looking at Tesla, Nvidia, Amazon, and nothing like that. Instead, these are companies that are focused on providing services for their customer base and providing consistency and long-term stability for their investors. So examples that I'm talking about in this situation are Johnson & Johnson, Coca-Cola, Procter & Gamble, PepsiCo. These are companies that have paid out and raised dividends for their investors for decades. There's even a group called Dividend Aristocrats, which are companies that are in the S&P 500, and they've raised their dividends for 25 years or more. Some of these companies have been doing it for over 50 years straight, and that's the definition of consistency. That's what you're looking for within this strategy. Now the question is, why is this such a popular strategy? The answer is that this strategy offers consistency and compounding in a way that others can't. See, there are two things you can do when you get a dividend payout. You can either take the money out and use it as income, or you can take that money and reinvest it back into the business. See, most dividend growth investors take that money and they do something called DRIP, which is Dividend Reinvestment Plan. Basically, most investors take their dividends and they reinvest it back into the business to buy more shares. When you buy more shares, you increase the amount of dividends that you get paid out, which over time creates a large snowball effect that grows your portfolio on its own. Here's a quick example. Let's say you owned a company that paid out a 3% dividend yield, and it raised that payout by 7% each year. Then your income would double in about 10 years roughly, even if the stock price never changed. Now imagine that happening over 20 or 30 years. See, that's how people build a reliable stream of passive income that grows faster than inflation. Finding a good dividend growth stock doesn't mean looking for stocks that have a high yield. In fact, sometimes high yields can be a trap. If a company's stock price falls, or if payouts aren't sustainable, then dividends might get cut. Instead, what we're looking for with this strategy is consistency and quality. Now, here are some things that you might want to look for. Dividend history, at least 10 years of consistent increases. Payout ratio. This shows what percentage of earnings goes to dividends. Around 40 to 60% for most companies is often sustainable. Earnings growth. The company should be growing profits over time. A healthy balance sheet. Low debt and strong cash flow. Reasonable dividend yields, usually between 2 to 5%. Again, sometimes too high of a yield can be risky and could end in a dividend trap. Dividend yield trap, something like that. You'll lose money. This strategy is perfect for anyone who wants steady, long-term growth without stressing about daily stock price swings. It's great if you like the idea of your investments paying you every month or quarter while you focus on other goals. It rewards patience and discipline, not luck. You won't get rich overnight, but in 10, 20, or even 30 years, dividend growth investors often have both increasing income and higher portfolio values. So that's the dividend growth strategy. Nothing too crazy or complicated. Buy good companies, let them pay you out with dividends, and make sure you reinvest those dividends over time. If you like this video, then please make sure to like, share, and subscribe for more content like this. And let me know in the comments section what dividend growth stocks or stocks in general that you have. I'll catch you in the next video. Take care.